Hello everyone, my name is Yaman Tashtavar, and I bring you daily updates on Tesla, tech, and the markets. Welcome to Tesla Live. We have a lot to go through today. Let's get started right away. Markets are down, just turned negative today. Nasdaq is down 0.3%. S&P 500 is down 0.2%. I think there's some Tesla news that we're going to go through. Tesla is pulling down the entire index today. Let's go to our actually before that yield curve has flattened out a little bit today. 5-year treasury yield is up 4 basis points. 30-year treasury yield is down 1 basis point. Oil is at $63. We're gonna go through some macro data as well. Let's go to the heat map right away. Tesla is down 7.3%. We don't see a similar drop in GM or Ford, so this is a company specific drop, and I think it all happened within the last hour or so. We're going to go through the Elon and Trump notes later in this episode. Everything else appears to be mixed. Palantir is down 3%. Financials are mixed. Microsoft is, I think, close to all-time highs. Apple is flat. Let's read our daily article. Wall Street gains as investors focus on trade, jobs data. Wall Street indices rose on Thursday after U.S. President Donald Trump and Chinese leader Xi Jinping agreed to negotiate on tariffs that have weighed on global markets, while investors awaited a key jobs report to gauge the labor market's health. The leaders have invited each other to their respective countries at a future date, according to U.S. and Chinese summaries of their phone call on Thursday. The call comes amid accusations between Washington and Beijing in recent weeks over critical minerals. Critical minerals. This is a very important topic. In a dispute that threatens to tear up a fragile truce in the trade war between the two biggest economies. I have no idea what the outcome will be. That's what makes investing in this environment really difficult, said a portfolio manager. I think it's less about trying to predict, etc., etc. Weaker than expected U.S. private payrolls and services sector data on Wednesday, as we discussed, so you can go into yesterday's episode if you want to hear a detailed discussion on this data. You can find it on my highlights section on my X profile, and on the YouTube channel. You can find it under the live tab. Raised concerns about the economic slowdown caused by trade uncertainties, with investors focusing squarely on Friday's non-farm payrolls report. Initial claims data on Thursday showed Americans filing new applications for unemployment benefits last week rose for a second straight week. We're going to dig into that as well. The jobs report comes ahead of the Fed's policy decision later this month, while they expect to hold interest rates. Despite continued calls from Trump to slash interest rates, Chair Powell has opted to stand pat so far, awaiting further data. U.S. equities rallied sharply in May, thanks to a softening Trump's harsh trade stance and update earnings beats. Let me see if there's any other news here. Tesla shares fell over 5%. Elon Musk and self-proclaimed first buddy of Trump has stepped up criticism of the president's massive tax legislation in recent days, causing nervousness among investors. We're going to dig into that as well. Brown-Forman fell nearly 17%, the most of the S&P 500, after the Jack Daniels maker forecast a decline in annual revenue and profit. Procter & Gamble said it will cut 7,000 jobs. We're going to dig into job cuts as well, or about 6% of its workforce over the next 2 years as part of the restructuring. Share of the consumer goods bellwether fell 1%. Advancing issues outnumbered declines by 2 to 1. I don't think this is... let's look at the updated data here. 52% to 44%. So that is dated data. All right. Trump-Xi further talks settle trade disputes. My understanding, in summary, that this didn't really change much. This was a call that Trump initiated, and not much has changed. But U.S. President Trump and Xi agreed to further talks to address trade disputes, including tariffs and the export of rare earth minerals. The highly anticipated call came amid accusations between Washington and Beijing over rare earth minerals. We've been covering this topic over the last several episodes. It's a very important topic, both for the economy, for the world, and for Tesla. And a fragile truce in the trade war between the two countries. The 90-day deal to roll back tariffs and trade restrictions remains tenuous, with both sides accusing each other of violations and threatening countermeasures. Nice little picture here. Not much detail, so I kind of struggle to go through this, but I'm going to scroll through it. If you want to pause and read it, you can, or you can just kind of Google the title. All right, let's move on. We have a lot to cover. Weekly jobless claims at 7-month high. Trade deficit posts record contraction. Okay. The number of Americans filing, this is weekly data, filing new applications for unemployment benefits increased to a 7-month high last week. Okay. So this is a topic that we've been covering over the last year or so in TSLA Live. I do expect the employment market to weaken. So this data is in line with my expectations. I think there's more to come as well, pointing to softening labor market conditions amid mounting economic headwinds from tariffs. The report from the Labor Department on Thursday also continued to show workers losing their jobs, having a tough time landing new opportunities as uncertainty caused by Trump's aggressive trade policy leaves employers reluctant to increase headcount. Economists said technical difficulties adjusting the data at the start of the summer could have contributed to the second straight weekly increase in unemployment claims. Still, they said the data offered some evidence of labor market strains. We won't dismiss the rise in claims over the last 2 weeks, which may be signaling weakening labor market conditions in response to Trump's tariff policy and uncertainty. Okay. However, seasonal quirks may have contributed to the rise in claims. Let me see if there's any data here. 247,000 versus forecasted 235,000. Okay. There was a sharp rise in unadjusted claims in Kentucky, likely related to layoffs in the motor vehicle industry amid duties on imported parts. Okay. So this is a key insight here. There was also a notable increase in filings in Tennessee, which also has motor vehicle assembly plants. So this is, a lot of it's coming. I mean, if you remember, tariffs on automotive parts were implemented first. So we might be seeing the real economy impact of tariffs implemented. I think that was March. So it takes about 2-3 months to see the first impact. And I think it's going to take a few quarters to see the full impact. All right. Claims surged in the prior week in Michigan, attributed to layoffs in the manufacturing industry. And obviously, Michigan is automotive heaven on earth. But companies are generally hoarding workers after struggling to find labor during and after COVID-19 pandemic. The Fed's Beige Book report on Wednesday showed comments about uncertainty delaying hire were widespread, noting that all districts described lower labor demand, citing declining hours worked and overtime, hiring pauses, and staff reduction plans. It said while some districts reported layoffs in certain sectors, these layoffs were not pervasive. Okay. Institute for Supply Management Survey also made similar observations, reporting steady employment in the services sector in May. We discussed this yesterday, and we're going to talk about it a little bit more today, but also pointing out that higher scrutiny is being placed on all jobs that need to be filled. U.S. stocks were trading lower. Dollar slipped. Number of people receiving benefits after initial week of payout, 1.904 million. Not much of a change there. We're going to look at the graph. I'm sorry if I'm talking too fast, but the claims that have no bearing on the Labor Market Department's closely watched employment report for May, scheduled to be released on Friday as it falls outside of the survey period. Okay. Non-farm payrolls likely increased by 130,000 jobs last month, after advancing by 177,000 in April, a Reuters survey economists showed. The unemployment rate is forecast to be unchanged at 4.2%. We'll see about that. Just keep in mind that there are revisions to these reports month after month, so it may turn out to be that the final number is lower than this, even if the initial number is higher than that. A gradual but genuine slackening in the labor market is underway, some economists said. Welcome news coming also. A separate report from the Commerce Department's Bureau of Economic Analysis showed the trade deficit narrowed sharply. I don't know if that's necessarily welcome news, with imports decreasing by the most on record as the front running of goods ahead of tariffs ebbed, which could provide a lift to economic growth this quarter. The trade gap contracted by a record 55.5% to $61.6 billion, the lowest level since September 2023. The goods trade deficit eased by a record 46% to $87 billion, the lowest level since October 2023. A rush to beat import duties helped to widen the trade deficit in the first quarter, which accounted for a large part of the 0.2% annualized rate of decline in gross domestic product last quarter. All right. Imports decreased by a record 16%. Goods imports slumped by a record 20%, held down by a $33 billion decline in imports of consumer goods, mostly pharmaceutical preparations from Ireland. Imports of cell phones and other household goods fell $3.5 billion. Industrial supplies and materials imports declined $23 billion, reflecting decreases in finished metal shapes and other precious metals. Motor vehicle parts and engines imports fell $8 billion. The front loading of imports is probably not over. Okay? Higher duties for most countries have been postponed until July. Okay? While those for Chinese goods have been delayed until mid-August. Yeah, so we might see some more front loading in July, June, July, but I think Q4 is going to be very weak if these things are resolved by then. I think Q4 might be really weak in the economy. The Trump administration had given U.S. trade partners until Wednesday to make their best offers to avoid other punishing import levies from taking effect in early July. Exports increased to an all-time high. Industrial supplies, materials, mostly finished metal shapes, non-monetary gold, and crude oil. All right, next. Initial claims we just discussed. I want to show a graph. So even though in recent weeks initial claims have been rising, they're still within the range of, it's a reasonable range, let's say, over the last few years. Employment market was really hot over here in 2022, still pretty hot in 2023 despite this surge in the first half. It recovered nicely. So it's been volatile over the last 4 years, but it's still at a very low level. What is changing, however, is the yellow line. The yellow line shows continuing jobless claims. So this is initial claims. If they file again for a second week, they are included into the yellow line. And you can see people are having a hard time finding a new job once they're laid off. Okay. Next, on top of that, we got the Challenger grade job cuts report for May, which showed a 47% increase year over year and 63% increase from the prior. And the comment was, tariffs, funding cuts, consumer spending, and overall economic pessimism are putting intense pressure on companies' workforces. Companies are spending less, slowing hiring, and sending layoff notices. We'll see if this reverses later on. Just want to kind of show this graph right here. Smaller and smaller pay increases. We discussed yesterday that companies with fewer than 50 workers employ 70% of Americans. Okay. Firms with less than 50 workers, ADP, median annual paychecks is hourly. And both series are showing smaller and smaller rises for most Americans. And on the other hand, now we're starting to see jobless claims increase, job cuts increase. So this could spell a recession soon. Q1, so everything we discussed up to here was April, May data. This is Q1, final Q1 read for unit labor costs, up 6.6%. Okay. Obviously, this is backward-looking data, but it's more reliable than some of these data that come out in a more timely fashion. So there might be a bit of a wage growth concern still in the economy. That's my takeaway from here, okay? Bit of a wage growth concern in the economy in Q1. This is from Liz Sanders. And also productivity was negative. So all that talk about AI increasing labor productivity, not happening yet. And I don't think it's going to happen anytime soon. All right, let's switch to tariff talk. Average effective tariff rate. This is a nice handy graph that kind of keeps track of all the changes, okay, from the budget lab at Yale. you can see that the average effective tariff rate is now 15.6%. 15.6%. Okay. We're gonna use it. I'm going to be using this tool to kind of keep track of ever-changing tariffs. Takeaway here is that it's about 5 times higher than what it was a few years ago. Okay. Trump summarized his call with Xi. You can pause the video and read about it if you wish, but not much, a lot of claims, but not much detail just yet. All right. Trump on Xi talks, straightening are out rare earths, top topic. So this might be the reason why Trump finally decided to call Xi, and the Chinese government made sure that everyone knows that it was Trump that initiated the call. But rare earths, very important topic. German auto suppliers again says we see risk of production outages because of rare earth export curbs. German auto supplier says the situation is highly critical. Okay, so if you haven't looked into this issue, you should. Across the pond, European Union cut rates again, but says getting to the end of cycle with today's rate cut. So that's interesting, okay? European Union has been cutting, ECB, European Central Bank, has been cutting their rates, while the Fed has been holding. And you can see the difference in the two rates here, okay? Target interest rates, the Fed has been on hold for the last several months. And you can see the difference being pretty wide. And interestingly, the dollar is losing value against the euro despite the rates coming down. Obviously, that's not the only thing that impacts currency exchange rates, but it is one factor. Okay. Neil Dada points out so I was looking at the two ISM services, one ISM services PMI and the S&P Global US PMI. My understanding is that the ISM service PMI is more reliable, which showed the contraction, whereas S&P Global US PMI was a bit more solid. Let's just read through this because it seems to be a good take here. In May, the ISM services PMI was weak, while the S&P Global US PMI was solid. Looking at new orders specifically, S&P Global US services PMI stood at 53, an expansion, while the ISM services index slid to 46 in May, the lowest since December 2022. Part of the disconnect likely has to do with what constitutes services. ISM includes a bunch of industries the S&P Global PMI does not. For example, ISM includes agriculture, mining, utilities, and construction as services, while the S&P Global PMI does not. This gives ISM service a bit more goods-producing tinge than its S&P counterpart. My general sense is that construction and mining are not looking so hot right now. I agree. And we've been talking about this over the last few months. On the flip side, S&P Global PMI has a larger sample size of around 400 service sector companies. So while it covers fewer industries, it has more survey respondents. Perhaps this is why the S&P Global PMI tends to be less volatile than the ISM. Lastly, for S&P Global, the business activity subindex is considered the headline index while for ISM. Okay, the headline is a weighted composite of the components. Okay, it's important to know what these surveys are measuring before drawing big conclusions about the outlook. In this case, services does not even mean the same sort of firms. Okay, that's good to know. Thank you. Trump made a few. So the reason why Tesla stock, let's take a look back at this heat map. Now Tesla is down 9%. Okay, the reason is because Trump said. I'm very disappointed in Elon. I helped him a lot. So there's a rift between the two big personalities, President Trump and Elon Musk. And it seems the friendship, the honeymoon is over. Trump also said, I would have won Pennsylvania without Musk. Questionable, I would say. But that's what he claims. And Elon, in response, said, whatever, keep the EV solar incentive cuts in the bill, even though no oil and gas subsidies are touched, very unfair, but ditch the mountain of disgusting pork in the bill. In the entire history of civilization, there's never been a legislation that both big and beautiful, etc. But one thing I do want to point out here is that Elon is saying EV and solar incentive cuts. He's not saying anything about mega pack cuts. He's not saying anything about mega pack cuts, mega pack incentive cuts. So battery production. Tesla makes billions of dollars from battery production incentives. And on top of that, Tesla also makes a ton of money from selling ZEV credits. Billions of dollars. Over time, it might be tens of billions of dollars. All of these incentives combined. So I think this is just talk. All right. On that note, thank you very much, everybody. And I'll chat with you all next time. Take care.